Welcome back. We are going to do another investment property analysis today, and this time it will actually be in Birmingham, Alabama. Birmingham is surprisingly strong as an entry level job market, so many Gen Z are actually flocking to Birmingham and other second tier cities to find jobs. And what's interesting here is that when you look at 2024 to 2025 changes, wages and hiring have actually improved significantly, while affordability is still relatively stable. So this is actually a really strong market to look at buying an investment property at. So what we're actually going to look at is this multifamily property that I found on Zillow. This is going for around $650,000. This bed and bath seems off for a 7 unit apartment complex. I believe it's actually 2 bed, 1 bath per unit. So in total, this should actually be closer to 14 beds and 7 baths. Maybe there are a couple of units that are one bed, 1 bath. This is definitely something to clarify with the realtor. So if you are interested in buying an investment property, you absolutely need to know all of the details, the total square footage, exactly the units you are getting, how many beds and bath in each, so that you can properly calculate the rental assumptions. What I do find interesting is that this has only been on Zillow for around 6 days, and there's already 315 views and 21 saves. This is really in Southeast Lake. So I don't know much actually about Birmingham itself. This seems like a very residential type of like area, though it does look like it's close to a major highway, so easy accessibility. I believe it's actually close to the airport as well. It is fairly easy to get around in this type of location, which is always a good thing. It's accessible. And then you also have what looks like a forest back here. So lots of hiking trails potentially as well, which is nice. Let's go back to the numbers. If I take the investment property financial tool that I built and I plug in the details with the purchase price, assumptions in closing costs, which here I have roughly around 5%, the down payment, the average interest rate, which again, these will depend on what you can afford. I always like to assume a 20% down payment at least. You get the best mortgage rates actually at a 25% down payment for investment properties. Anywhere between 20 to 25 is the preferable range. I will say it is possible to put less than 20% down payment on an investment property. However, you do have to pay a private mortgage insurance or a PMI, which makes it a little bit less attractive since that takes away from your overall cash flow. What we're going to look at for monthly rent and vacancy rate assumptions. Interestingly enough, when I go back into the listing for Zillow, what I'm actually finding if I look in the same area is that for rent, so I'm trying to find comps in this area. And the interesting thing you will see here is that this complex is actually also listed for rent. And it looks like it was actually put on rent first before the owner decided to put it up for sale. So this is quite interesting. This might point to the fact that they aren't able to rent it out. We will, of course, have to see, but it looks like there are 7 available units in this apartment building. So it absolutely is the same building. Not much information. You don't really see much around like the square footage, but it does look like it is actually Section 8 friendly, which is not necessarily a bad thing either. Take a look at the comps in the area. This is actually going for $1,000 a month, although we don't actually see the square footage. Are there other properties like that around this area very close by? What's interesting is that you can already see some comps here. Like this is also another 2 bedroom quadplex actually. So these are also 2 bed, 1 bath, and the base rent is actually going for 775. This kind of looks relatively the same as the other unit. I would say it looks a little bit more fresh and clean compared to the other one, but the fact that this is going for 775 whereas the other one is closer to 1,000 either means that the square footage is significantly better in that unit or they are overcharging for rent. Let's take the comp of 775. I mean, it does look like around this area, nothing really touches the 1,000. This one does, but this looks highly renovated. And again, you're getting greater than 1,100 square feet. But if you look at some of the other ones here that are available, most of them around the 700 and 800 square foot range that are 2 bed, 1 bath are roughly around 750, 775. So we're going to use that as a comp for right now. Some of these are, of course, houses. We are not necessarily going to treat that the same. With houses, you do typically get a little bit more space than an apartment. So these numbers may be a little bit inflated for what we would want to use as a comp. Let's make that the assumption. And there's 7 units there. So we're multiplying it by 7. Now, like I said before, we do have to confirm assumptions with the realtor. So not all of these units may be 2 bed, 1 bath. However, we're going to assume for simplicity's sake, that is what we're working with here and that we can charge $775 for the rent. Vacancy rate is widely available via a Google search for the town you're looking to purchase in. So if you quickly Google what the vacancy rate is for an apartment building or for single family residences, you should get this number fairly easily. Let's scroll down and see what we get. This one is definitely not as bad as the Jack's Beach property we looked at in the other video. You do actually take a pretty significant cash flow loss up until really year 7 or 2032. Not as terrible as the other one, but also not as great either. So what needs to happen in order to make this more attractive? In this case, there's a couple of things that you yourself can influence. Say this purchase price is a little aggressive. 650K doesn't necessarily make sense. If you can get this down to 600, that'll actually dramatically reduce the cash flow loss to just 3 years. So you'll already start cash flowing on the property in 2029. $50,000 price cut will already kind of get you to a pretty okay place. You, of course, will take depreciation when you file your taxes. There's our cost segregation options as well for front loading some of that depreciation to save on taxes. So you may be able to make a case for this because the loss is not as steep and you only have 3 years of losing before you start cash flowing out. Now, let's say you did buy it for the 649,900, and then let's say you're actually getting the $1,000 rent, right? That this owner is actually looking for. What does this look like? This actually makes the property extremely attractive. So this is cash flow positive since year 1. This is actually quite strong. But looking at the comps, it seems relatively difficult to kind of get the $1,000 per month. These individual apartment units need to be cleaned up a bit more in order to really get the top dollar that they're looking for. Like the kitchen is a little bit outdated compared to some of the other places that are going for, 1,000 plus. But with some investments, cleaning up the apartment, updating the kitchen a little bit, it is possible to get higher rent.
The last variable we'll look at is the mortgage rate. Mortgage rates have been trending down. If we assume a lower mortgage rate, let's see how this impacts our calculation.
If, let's say, we are able to cut this down to let's 6%, right, which is actually pretty strong for an investment property, this starts looking a little bit more attractive. We might have to cut it down to, let's say, 575 in order to get this to actually cash flow out the way we would expect.
It looks slightly better compared to a 6% mortgage rate, but the 575 isn't really getting you to cash flow out even until year 4. You'll see greater impacts from reducing the purchase price or bringing up the monthly rents. That's what's needed to make this rental successful.